Hey everyone, and welcome back to the channel. Have you ever been staring at your charts, everything looks perfect, your technical setup is flawless, and then bam! Out of nowhere, the market moves violently against you, blowing up your trade? You're left scratching your head, wondering what just happened. Well, the answer might not be on your chart. It might be happening thousands of miles away. Today, we read Decoding the silent roar of macro events, and showing you exactly how global news directly impacts your day trades. This isn't just about abstract economic theory. This is about understanding the invisible forces that move your P&L every single day. We'll show you how to connect the dots between a headline and your trading account, turning seemingly distant news into actionable, profitable opportunities. Think of it this way. The market is an ocean, and your technical analysis helps you read the local currents. But macro events are the massive global tides and storms that can overpower everything. Ignoring them is like sailing without a weather forecast. We're going to dive deep into how geopolitical shifts, economic announcements, and even natural disasters create immediate, tangible effects on volatility and asset prices. By the end of this video, you'll have a new lens through which to view the markets, empowering you to capitalize on these macro-driven micro-movements before the rest of the crowd catches on. So let's get started. First up, let's talk about what I call geopolitical earthquakes. These are the tectonic shifts in international relations that send shockwaves through the financial world. Take tensions in the Middle East, for example. When conflict flares up in a major oil-producing region, what happens? The price of crude oil often spikes, but the effect doesn't stop there. This is a cascade. Energy stocks like ExxonMobil or Chevron will likely rally. Airlines, on the other hand, face higher fuel costs, which can put downward pressure on their stock prices. Even companies that rely heavily on transportation, like Amazon or FedEx, might feel the squeeze on their margins. It's a chain reaction, and if you can anticipate it, you're ahead of the game. Another classic example is a major election. Let's imagine the upcoming German federal election. A shift in government could lead to new policies on renewable energy. This might cause a rotation out of traditional industrial stocks and into green energy ETFs. It could also cause volatility in the euro. Your job as a trader is not to predict the election outcome, but to understand the potential market reactions to each possible result. And of course, there are trade disputes like the ongoing US-China tariff saga, especially around semiconductors. When new tariffs are announced, it's not just a political headline. It creates immediate winners and losers. A company like Nvidia might face headwinds, while a competitor that isn't subject to the tariffs could see a boost. By following the news, you can identify these specific companies and sectors and trade the ripple effects. Next, let's decode the market's crystal ball, economic announcements. These are scheduled events, so there's no excuse for being caught off guard. The big one is always central bank rate decisions. When the Fed announces its next move on interest rates, the market holds its breath. If they hike rates more than expected to fight inflation, what typically happens? Growth-sensitive tech stocks, which rely on cheap borrowing to fuel their expansion, often take a hit. The bond market will react instantly, and currency pairs like the dollar-yen will see huge volatility. Conversely, if they signal a pause or a cut, it can be rocket fuel for the stock market. You need to know when these announcements are and have a plan for how you will trade the reaction. Then you have inflation reports, like the monthly CPI data. When the November CPI numbers came out higher than anticipated, what did that tell us? It suggested that consumer purchasing power was eroding. This could lead traders to short retail stocks or companies that sell non-essential goods, anticipating weaker consumer spending down the line. It's about thinking one step ahead. And don't forget jobs data, like the non-farm payrolls report. A surprisingly strong jobs number, like we might see in December, is usually a sign of a healthy economy. This can be bullish for cyclical stocks, companies in sectors like industrials and materials that do well when the economy is expanding. A weak number, however, could signal a slowdown, sending investors fleeing to defensive assets. Each of these reports is a piece of the puzzle, giving you clues about the market's next big move. Now, let's talk about the truly unpredictable, natural disasters and other unforeseen shocks. These events can't be marked on a calendar, but their impact is just as powerful, if not more so. Imagine a major hurricane makes landfall in Florida. It's a human catastrophe, first and foremost. But from a market perspective, it creates specific trading opportunities. Insurance companies in the region are likely to see their stocks fall as they brace for a wave of claims. But who benefits? Construction and building material companies, like Home Depot or Lowe's, often rally on the expectation of rebuilding efforts. Agriculture commodities that are grown in the region might spike in price due to supply destruction. Another shock could be a major supply chain disruption, like when the Ever Given blocked the Suez Canal. It was a logistical nightmare, but for traders, it was a signal. The event created bottlenecks that caused shipping rates to soar and delayed goods worldwide. This was a clear cue to look at logistics companies, shipping stocks, and even commodities that were stuck in transit. The price of oil jumped because tankers couldn't get through. And of course, we're all familiar with pandemic-related shocks. A headline about a new variant or a concerning health advisory can cause immediate reactions. Biotech stocks involved in vaccines or treatments might surge. Meanwhile, stay-at-home stocks like Zoom or Peloton, which benefited from lockdowns, could see renewed interest, while travel and leisure stocks might dip. The key here is not to panic, but to have a playbook for how to react when the unexpected happens. So how do you actually turn all this information into a real, actionable trading edge? It's about building a system to process this macro news and integrate it into your daily strategy. First, you need access to real-time, high-quality news. This isn't about watching the evening news. You need a professional-grade news feed. Services like Bloomberg, Reuters, or specialized trading news platforms provide instant alerts that can give you that critical head start. They also offer sentiment analysis, helping you gauge the market's immediate emotional reaction to a headline. Second, consider using sector-specific ETFs. Instead of trying to pick the single best energy stock after an oil spike, you can trade an ETF like XLE, which gives you broad exposure to the entire energy sector. This is a great way to capitalize on these big macro themes without taking on the individual risk of a single company. You can apply this to tech, healthcare, financials, any sector being impacted by the news. Finally, and most importantly, you need to build your own macro event playbook. This means thinking through these scenarios before they happen. What's your plan for a surprise Fed rate hike? What stocks or ETFs will you look at if a major trade deal is announced? What's your go-to move if a natural disaster hits a key economic region? By creating predefined responses for these recurring global events, you replace emotional, panicked reactions with a calm, disciplined, and strategic approach. You'll know exactly what to look for and how to act, turning that chaotic global news flow into your personal trading advantage. It's about being prepared, staying informed, and connecting the macro dots to make microsecond decisions. And there you have it. The world outside your trading screen isn't just noise. It's a rich source of information that can give you a significant edge. By understanding how geopolitical events, economic data, and unexpected shocks ripple through the markets, you can move beyond simple chart patterns and start trading the fundamental stories that drive asset prices. It's a skill that takes practice, but once you learn to see the connections, you'll never look at the markets the same way again. You'll be able to anticipate moves, manage risk more effectively, and find opportunities that purely technical traders will completely miss. Start small. Pick one type of macro event, like central bank meetings, and study how the market reacts. Build your playbook one scenario at a time. Over time, you'll develop an intuition for how global events translate into market action. Thank you so much for watching. I hope this gave you a new perspective on how to approach your trading. If you found this video helpful, please hit that like button and don't forget to subscribe for more content designed to make you a smarter, more informed trader. Let me know in the comments which macro events you're watching right now. Stay safe and happy trading.